Hi guys, welcome back. I've been away for a while. I'd gone to the countryside, but now I'm back. Let's do this. On the monthly, silver is bullish and is trading up to fill this imbalance, has filled it halfway and has traded above the previous month's high. On the weekly, we can see that price traded to this $24 level of supply and demand and was rejecting it. So it rejected a lot of times. So there was a lot of weakening to both to the upside and to the downside. But finally, it was able to trade above the $24 level and close above it with the previous week's candlestick. Now, from here, I expect price to trade to this $25 level because it's the next level of supply and demand, and there's imbalance on the daily. And on the weekly, you can see it's filling this imbalance. It's almost filling it completely because it filled it halfway. On the daily, we can see that price had come up to this level and started consolidating, started moving sideways, a lot of sideways movement, pushed up, rejected this level, traded below here to take out this sell side liquidity, then eventually traded up into this zone of imbalance. Yeah, there's this buy side liquidity it was heading to, and it has taken it out, so you can take. So the structure is overall bullish. As you can see, the previous high, current high low, current high, but it's almost being broken up here. So I still expect the market to trade up. So on the 4 hour, we can see price try to break structure down here, but then it traded into this level of supply and demand here and rejected it to the upside. So structure is still maintained as bullish. You can see on the 4 hour there is some imbalance here. In this candle. So yeah, this is the imbalance to the downside on the 4 hour. This is the imbalance you're targeting on the daily, which is yet to be filled. On the hourly, you can see that the structure points are different, which are here, here, and here. So on the hourly, structure is still bullish, heavily bullish. So what I'd expect is a retracement to one of the fib levels before price continues with its up move. What you can see is that this fib level coincides with this $24 level of supply and demand. So I expect price to trade below here, come to this $24 price point, and then expand to the upside to 24.7. Since price is still bullish, I expect price to trade down, fill this imbalance at least halfway, and halfway of this imbalance coincides with the 50% of the fibs. So that's why I see price trading to before it gets adequate strength to trade above this level, because you can see here it has formed equal highs, and that is liquidity. And as we have seen on the high time frames, structure is bullish, so we're waiting to buy. On the 15-minute, you can see that it's a bit different. Structure is a bit different because now here the structure points here, here, and here. But then since it's such a low time frame, I expect price to come trade below here, take out this liquidity over here, this liquidity over here. Now let's map out our Asian range. Yes, so we have a trending Asian range because you see price is moving in one direction. And when it's like that, there's a high probability that it will completely cover the Asian range before going up. So that's more confluence to our setup, our buy setup. from the $24 price point. You can see this other level of sell side liquidity just below this low, which coincides with the weekly supply and demand zone, which shows there is a high probability of price going in our favor rather than not. On gold, the monthly, we can see that it has been majorly bullish, so bullish from the time it came down here in last year's October, came to this level and then shot up from the 1620 level of supply and demand. On the weekly, you can see, it has been continuing this bullish trend for such a long time. It came and took out this liquidity up here and is now traded to the 1915 level of supply and demand, as said in our previous analysis. It left imbalance here to the downside, but this, before price trades below to this point, it will be a significant amount of time. Then on the weekly, we can see that it has come and filled this imbalance at least halfway, but I expect the whole imbalance to be filled, so I'm still waiting for price to trade up and cover the rest of this imbalance up here, this remaining imbalance, before it can decide to even trade lower. The daily will mark the previous day's high and low. You can see that the market has been very bullish and in a strong uptrend with a lot of volume and momentum, and I expect price to trade up to 1940 at least before price starts retracing to the downside. You can see today it had already started to trade up, but then had a small rejection. Go to the 4-hour. So these are the new structure points. And you can see price left an imbalance here. On the hourly, we have the structure points here, here, and here. So what I expect price to do is to come, trade lower, then continue with its up move to this point. So it won't be such a huge move from this point in time, but it's how many? It's around 400 pips. That's decent. So let's draw fibs. We see that this hourly structure levels coincide with the fib levels and the imbalance, and also this 1915 level of supply and demand. So this is the area where I expect price to retrace to and reject to the upside. I would have used these 4 structure points, but based on the volume of this uptrend, there is a low probability of price trading in this area over here before continuing its overall move. Okay, I could see this level of sell side liquidity here, and then if we draw out our Asian range, see it's a trending Asian range, so there's a high probability of price trading below this level before getting adequate volume to continue with its move up. So that's what I'm waiting on gold and silver. If you want to be a fund manager, check out the links in the description. Have a nice time and follow the chats with me. Peace. Oh, I feel for my brother.